So, which is the best sector to invest in the stock markets in 2025? We're already halfway through. The next half, which are the best sectors that if you invest, you'll make a lot of money guaranteed? Is there a best sector? Or what should be our approach? Should we chase the best sectors? ICICI Direct, on their website, there is this article saying fastest growing sectors in India in 2025. And on the top is IT, and then green energy and renewables. An article in ET says experts bullish on six sectors for good returns amid stock market volatility. This was way back in January. So, which are the best sectors that we should invest? Or should we really go after sectors? And this video is exactly about that. There's an analysis on various sectors that I've done. I've pulled this data from Economic Times Wealth edition, and I want to show you this analysis. And then you can make the decision which is the best sector to invest. Hello, I am Franky Fernandes. I'm a certified financial planner. I'm also a coach, a marriage coach, a relationship coach. This is my passion to help young families to grow their wealth, manage their money well, and also to stay happy. Are you one of them? Are you a young couple? If so, then if you have not subscribed to this channel, I encourage you to subscribe. My goal is to help couples like you to plan their finances, give them tips and tricks how to grow their wealth, how to take care of their expenses, and how to live in harmony. So today's video is about the various sectors. Are you ready? Let's get into it. Take a pen, a paper, and sit together as husband and wife. I believe that when you work as a team, when you know things as a team, you can do far greater, far better investing. Let's get into today's video. So here is this trend map, which I've picked from the Economic Times Wealth edition. So here it gives you all the top nine sectors, and how they have performed every year since 2015 and 2025, the first half. So 10 and 10 and a half years, roughly 11 years. So what does this tell us? In 2015, Pharma was top. 2016, metals. 2017, real estate. And real estate, if you see, it was also in 2019 and 2023. And then 2025 is banks. 2024, last year, it was pharma. And pharma has been there 3 times on the top. And something very interesting is coming up about pharma. Please hang on. And you also have metals and IT, and metals has come here thrice, right? So, and what this gives is what percentage. For example, in 2015, pharma gave in the calendar year 2015 9.5% returns. FMCG gave 0.7, and rest of them were all negative. That means pharma did best in 2015. It gave a positive return, whereas most of them were negative. In 2016, metals 44.9, 19.5, 9.8, 6. So most of them were positive. There are some negatives here. Now, fast forward 2024. Again, pharma was at the top last year, 38.9%. Then real estate, then auto, IT, and FMCG is at the bottom. Now, if you look at this very interesting snapshot of the returns. Now, I want you to understand a few things here, very important, right? Just don't go by the top sectors. Look at what are the returns. There are 3 digits, there are 2-digit returns. This is one thing. For example, banks, this year it is 12.5%. But also note that real estate is 101, but here it is -6, here it is -15. So they may be at the top with double or triple digits, but they may not do well. For example, let me give you a hint. Pharma, it's on the top here thrice, But the rest of the time it is minus 7.8, minus 9.5, minus 6.7, minus 14.3. So it doesn't matter who is at the top which year. All it matters is over a long period, 5, 10 years, how have they performed? And we will see a very interesting analysis. So what I've done is I have put them in a spreadsheet. I have found out what are the absolute returns. What if you had invested 100 rupees at the beginning of 2015, how much would it would be in 2025 for all sectors? What if you had done SIPs of 100 every year in each sector? What would be the returns? What are the compounded annualized returns? And also, that is for the lump sum, and also the IRR for the SIPs. And it gives us a very good picture and which sector has performed, the top sector. And what does it mean to us? How should we interpret? What should be our plan of action? Let's take a look. So here is what I'd talked about. I've taken that snapshot of all the sectors and put it into an Excel and taken a screenshot of that. And I want you to look at this quickly. So I want you to look at it carefully. So from 2015 to 2025, Pharma, as you see, in 2015, it is at the top, probably to 2020, it is at the top, obviously because of COVID. And then again, we see in 2024, it is at the top, right? And we have the real estate, right? Real estate is, as we just see, it is at the top here. Again, maybe it is, yeah, probably it is at the top here. And banking is at the top in 2025. So just exactly the way we saw. Now, what if you had invested 100 rupees lump sum in Pharma in 2015? By 2025, you would get roughly 200. That is 100% returns, absolute, from that day till today. In FMCG, if you had invested, you would get 270 a lump sum. You would get 270 more than Pharma. Again, as I just mentioned, although it is at the top, it doesn't mean much. IT. IT, you would have got 342. And these greens, what do they mean? Uh, if you invested 100, this is what you would get. And these are the top five. That means IT, energy, banks, real estate, and metals would be the top returns if you had invested lump sum. That is 2015, 100 rupees, and just kept it. So that's why it is green. So in energy, you would get 409, auto, you would get 272, 291, in infra, and so forth and so on. Absolute returns for 10 years. So here you get 100% returns, year 170, 242. And if you see here, uh, real estate is at the top in the last 10 years, the absolute returns. Then you've got metals, banks, energy. These are the five sectors. Now, what is the compounded annualized returns? So highest is, of course, real estate. And then you've got metals and banks, energy, and see the returns. 14%, 11, 10, 13, 12, in that range, right? And the bottommost is Pharma. Although top three times, but other times the negatives have actually been far, far greater. Hence, the lowest returns the last 10 years is Pharma, 6.5. It has not even probably just beaten or equal to an FD. Some bank FDs could have given higher returns. FMCG is the second last 9.4, not bad. And then you've got auto and infra, which have given 10.2. But the rest of them have given very good 14.3, 11, 10, 13.7, 11.9. What if you had invested 100 rupees a SIP for 11 years, right? From 2015 to 2025. So Pharma would have given you roughly 1100 would have become 1971. Uh, Again, real estate would have given you 1100, would have given you 3000. And same way, metals and auto and infra, they would all given you about 2000. And what is the annualized returns? The for the SIP is something like 19, 16, 14, 13, 13. Pharma, although lump sum was not good, but SIP seems good because of all these dips. So whatever was invested in the dips have actually given good returns. And FMCG seems the lowest. Now, what does this tell you really? One thing that tells me is that you don't know which sector will do well, which year they would do well, and the year they do not do well, how bad will it be for them? We don't know. Absolutely nothing. So, number one, we cannot time the sector. We cannot predict the sector. Second is we cannot predict the time, which means we should not venture into thematic or sectoral funds. We don't know when they will do well, when they will not do well. And if something like a pharma, I remember I had invested in 2021 because in 2020 it did well, but in by 2022 I actually came out because I realized it was only sliding down. Probably I made a good decision. That is what it seems like. And so do not do sectoral, do not do lump sum. If at all you want to invest, do SIPs. SIPs are the best because they take advantage of the dips and you get good returns. Now, what if you have to now in the future, if you have to choose sector, which sector would you choose? Which sector would I choose? Let me tell you in the next slide. I'll choose all the sectors. And this is the average. I'd choose all the sectors, not just one sector. And I want you to see the power of diversification. All sectors means it is diversified. I don't know which sector will do well in the future, but I know if one sector doesn't do well, the other sector will do well. And probably there are more sectors that will do well compared to the sectors that won't do well. And what does this show? These are the average returns. Well, it is not as simple as it seems like, but to simplify, I'm showing it. In reality, it may not happen like this. There could be weighted averages. There could be, for example, the index has a certain weightage. So I'm not getting into that. I want to simplify it to show you the power of diversification. So 100 rupees would become 349. Now I want you to look at the which are the sectors that have done this well. If you combine, for example, metals is lower than this. Only real estate is higher. Banks is lower. Infra is lower compared to that. Auto is lower. Energy is higher. Rest everything is lower. That means when you combine all of them, actually it gives you more. So can we take this for the future? Why not? And I'm coming to that. What is the best way to do it? Now, absolute returns in 10 years, 250. Now, which have done better? Real estate, energy. Only real estate and energy out of the 9 sectors have done well. Rest all have done all have done bad, worse compared to the average. Now, a lump sum, the CAGR, 12.73. Real estate has done better, 14.3. Energy has done better, 13.7. Rest all have done poorly. Now 100, if I had done a SIP, if we had done a SIP, the returns is the value will be 2387. Now only real estate is better, metals are better, infra better. Rest all are worse compared to the returns when you have all of them together. And the annualized returns 14.63. Which are done better? Metals, real estate, infra. So, what is the message you get? When you combine all of them together, the power of diversification, the average is better than picking individually. Why would you pick? Why would you pick one or two sectors? You don't know which sector would do well. So now, what is the best way? What do we do? How do we buy all these sectors? I'm sure you've got the answer. Simple answer is invest in a mutual fund. Don't chase after sectors. Don't go for thematic funds. Even mutual funds don't go for thematic and sectoral. I've done a separate video on thematic funds. Please watch that. Very, very important analysis I've done. Invest in a mutual fund, a diversified mutual fund. I would strongly recommend it's one of the flexi caps because it has got the large caps mostly and also some of the good mid caps and small caps. Give it to a fund manager. A fund manager knows, can predict better which sectors would do well. They have a huge research team. Watch my video on is it time to switch from direct stocks to mutual funds. I've explained clearly how mutual fund managers are superior. So buy a diversified mutual fund and do an SIP. Nothing better than an SIP. Watch my videos on SIP. You do an SIP, definitely do well. In the last 10 years, some of the flexi caps have given even 20% returns. Yes. What you just saw are the sectors, they are the indexes. But fund managers have generated alpha. Alpha is over and above the benchmark. And they have got around 20% returns. SIPs, lump sum, whatever. Phenomenally well, phenomenally done well in the last 10 years. Better than what you just saw. Why would you go for a sector? I don't see any reason. I hope you have you have a bulb on moment right now. And what would you do? Don't waste your time. Don't time the market. Don't predict the sector. Just give it to a fund manager. You do your job. You do take care of your health. Do some jogging. Do some exercises. Read up. Read books. Watch some good podcasts or videos. Do your job. Excel in your job. And leave it to the fund managers. The sectors. Now, which sectors would you buy? Let me know in the comments which sector you plan to buy. Or do you plan to invest in mutual funds? I'll be happy to share. If you're new to this channel, I encourage you to subscribe. And if you like this video, do let me know. If you didn't like this video, do let me know. And let me know in the comments what you liked, what you didn't like. I'll try and answer your comments. Bye for now.